this is Henry, and this video acts as an educational purpose only. So today's topic is going to be how are we going to trade like a Japanese? How are we going to forecast a market in either stock market or forex market like a Japanese? Right. As you can see from the title, it's Ichimoku Kinko Hyo. It's one of the indicators developed by Japanese in the late 1930s by Goichi Hosoda. Or it's also known as Ichimoku Sanjin. This guy developed this technique, and it took him 30 years to publish it to the public in the late 1960s. Right. So today we're going to learn how to use this technique to forecast a modern market. So the first, it's very simple. You can see from this chart here, right? This is a Japanese candlestick chart. It's a very simple Japanese candlestick chart, and it's a pure candlestick chart with no other indicators is shown here. It's just a blank, empty indicators. Alright, so we're going to add our first Ichimoku Kinko Hyo indicators by insert indicators Ichimoku Kinko Hyo. Right. So you can see there inside of Ichimoku Kinko Hyo, there are another 5 components as a basic building block. So the first is Tenkan Sen, which indicates by a red color, a Kijun Sen, a blue color, Chikou span in green, up Kumo, or in other words, it's a Senko span A in a dark blue, and down Kumo, or the name for it is a Senko span B in a red color. Right. So I'm going to explain what of these meaning, each of them, and how we're going to combine 5 of them. Okay, and to forecast the market. Right. As we get started, for the first time, adding Ichimoku Kinko Hyo, if this is your first time to look at the chart, it might be a little bit intimidating because it might mess up the entire chart. So let's just get started. Right, this is it. It's one of the most complex indicators that you could find compared to other more simple like RSI, moving average, RMR, or maybe ATR, MACD, or something like that. But as we get started, to be not get confused, I will start from the red line or the Tenkan Sen. And again, this is the red line. You can follow it carefully. Right, red line is a Tenkan Sen, and the blue line is a Kijun Sen, and a little bit green line is a Chikou span. Right, and a blue right above is a Senko span A. If you hover, you can see the flavor Senko span A 138307, and this is a Senko span B. And there's something called a Kumo clouds. Okay, Kumo clouds is a range between these two. You see a dash is a Kumo clouds, right? So this 5th component is already shown in the chart, and now we're going to go one by one. So the first one will be very simple. It's a Tenkan Sen and it's a red line. You could see a Tenkan Sen here. So the formula behind the Tenkan Sen is actually the average of the highest high and the lowest low for the past 9 period. Right. So if you could see this line here, the dot here, flew here is actually average of the highest high and highest low for the 9 period behind. If you are using a time frame of daily, that means 9 days. If you're using a time frame of hourly, that means 9 hours ago. Okay, so they combine, let's say from now 1, 2, 3, 4, 5, 6, 7, 8, 9. So here, from this point up to this point, 9 days, right? We get the average of the highest high and lowest low, and we get a point up here. Of course, this could be recalculated every time. There's a new bar chart, a new candle chart is showing up, and it's recalculated again. And one note to remember in the Tenkan Sen is a short-term movement because it takes 9 days, right? Compared to a Kijun Sen, which is a little bit medium terms movement, right? And how it is used with the chart. So there are a few things here is need to note in the direction of the Tenkan Sen itself. So if the Tenkan Sen is pointing upwards, it might means a price will go into a uptrend direction, or in other words, in market words, we call it a bullish direction, right? On the stock market or in the forex market. So bullish direction is point upwards. Okay, you can see the more steep the angle of it, the pointing upwards, because it's almost vertical. This might indicate a strong momentum of the trend movement, right? If it point downwards, for example, this in point downwards. It's a little bit stepped down there. This indicates a strong momentum that pushing it down, pushing the market down a bit. So, and what happens if it is a flat? If it's a flat, for example, a flat, like we could find any flat market movement here. Maybe this a little bit flat direction, right? This you can see a consolidation movement, right? You see another flat. This a little bit flat, these two lines, right? This is a consolidating market. Consolidating market or equilibrium market is basically a term used for when a market is not in a trend or in a ranging, right? These types of market is very dangerous to trade, so it's better to get out whenever you see a flat line, Tenkan-sen or Kijun-sen. And this only happens in a shorter time. So in this case, in a few days only. Right? If it changes to hourly in a few hours. That's a Tenkan-sen for you. And there are a few let's be moving forward to the blue lines of Kijun-sen. Over it, yeah, Kijun-sen. Kijun-sen is a blue line. So the formula behind the Kijun-sen is pretty similar with the Tenkan-sen, right? The only difference is the period being used, right? Kijun-sen will also calculate the average of highest high and highest low of the price market, but for the period of 26 days, right? So if you're starting from here, it will track back up to the 26 days behind, right? If you track now, it's around this date, right? 26 from here to here, around this area, we are going to get the average of the highest and highest low, right? Then this take a huge, a little bit higher, bigger coverage compared to the Tenkan-sen, and so this might mean Kijun-sen have a medium term movement, like indicates a medium term movement, right? And the other behavior is similar with Tenkan-sen, so when it's point upwards, it might indicate a medium term of bullish, right? For longer terms of bullish, right? The steeper the angle is, produces more strong momentum, right? Same goes to the when happens to be a bearish market, a huge bearish, which around almost 800 points downwards. What happens if it's a flat? It's a flat here, and because a major consolidating market here. And remember to always get off from the market when it's a flat. Let's look at a flat here. Although this indicates there might be a little bit contracting with each other. This flat and this is downward. Of course, in the downward it's a short term period, but in the long term it will be coming back and forming a consolidating area, because the Tenkan-sen always support a Kijun-sen. Whenever this we can see, if we predict more future, this is the current one, something like that. So you can see I have a flat. Okay, and how are we going to combine these two lines, okay, to produce a higher probability of forecasting market, right? So there are a few things to remember. Is whenever a price is right above these two lines, okay, it might indicate a strong momentum of bullish. Whenever the price is right below these two lines, right, showing in this blue and red, right below it is showing a strong bearish. So you want to try to make sure that the price is either above or below, not between of them. Between of them might indicate some sort of consolidating market. And also this, if you ever try a Bollinger Bands, this acts like a market or acts like a Bollinger Bands. Okay, it always tries to drag the price closer to these two lines. So if you see the price is going too far away from the Tenkan-sen and Kijun-sen, be aware that the momentum might lose its momentum and might be dragged back, pulled back. Okay, so at Leather we are trying to combine a Japanese techniques, okay, with a Western techniques to determine how far is far, okay, how far is far? Because from this to this is 189. For you, it might be not that far, but for me, it's far. Okay, but let's say because it's a far is a relative, so we're going to put the standard how far is far later on. And let's move to the third component. It's a Chico span. Chico span here, right? Chico span is a Korean span. So what is Chico span? The calculating behind the Chico span is pretty funny. So to make it a little bit clear, let's just start with let's just start modification a little bit, like we change the color to none to check a clear margin. Right, Chico span here. You can see whenever a price Chico span calculation is the current price is being shifted 26 days behind. So for example, at this market here, the close price of this is being shifted 26 days ago, and you can see the point here. So the point here is actually the history of this price 26 days ago, the closing price of this, right? It's 26 exactly. Closing price of this will be this. So it's being shifted backwards. So what is the purpose of doing this? The purpose of doing this is to measure or to compare the current price movement, which is here, with the price 26 days ago or 26 period ago. If you use hourly, 26 hours ago with current time price, you want to compare it. So if the Chico span is higher than the current with the higher with the price below it, it might indicate a bullish trend. Okay, if it is right below the price, it indicates a bearish trend or downward trend. Right. So there, for the Chico span to use, I want to make sure that it doesn't touch the price, something like this. This might indicate a consolidating market. Okay, consolidating price if the Chico span touching the price on the 26 period ago. So we want to make sure how to track the Chico span is we want to make sure that Chico span will have an area that it will not touch sooner. Okay, or it will not touch in the next time period. We call those as empty area, empty box area. So something like this. Maybe here. Let's assume the current price is here. 26 days ago of the current price here. We haven't seen this area yet. This area is empty yet. We assume here. So if you see from here, right, 10 periods in the future, which is 10 days in the future, something from here to here, this area, you want to make sure the price have no or less chance to hit the current price, even if it's a major drop like this. This is one of the cases where the major drop happens. Let me hit it. But common sense, right? But in a higher probability that it won't touch either vertically or horizontally. So if vertically means there's a major trend happens. Horizontally is when going through the times as of the time. So the chart we notice here is the price, this is the time. To make sure that we have a big empty box here, right? This indicates a trend can be continue, okay? Continual trend. So that's Chico span, and Chico span can also act as a resistance and a support. So if you something like every peak of it can act as a resistance. So if you want to draw like a trend line from here to here, you can see this trend line from here we can almost touching a two high peak here. This can act as a resistance, right? Resistance. This is a pretty great resistance you can draw. Oh, there are few resistance like here to here is touching around four peak around this. 4 peak, one huge resistance area. So Chico span can also act as a resistance and support area will be somewhere below it. Okay, and let's be moving forward to the clouds. Okay, Kumo clouds. Kumo clouds is a combination between a Senko span and a Senko span B. So Um, this area of clouds is divided into two. There's something called a bearish clouds, or the downturn, downwards clouds, and a bullish uptrend, downtrend, bullish. Right. So in order to get a bullish clouds or Kumo clouds bullish, we need to make sure that the Senko span A is right above the Senko span B. In order to get a bearish, the Senko span B is right above the Senko span A. Right. From the future itself, let me explain how this is being drawn. This kind of cloud is being drawn. Okay, the Senko span. Before that, let me bring these two things back. Let's drop Ichimoku Kinko Hyo red and blue. Close it. To get it right. And the Senko span A. The Senko span A, the formula behind Senko span A is the average of the Tenkan Sen and the Kijun Sen. Tenkan Sen and Kijun Sen, the average of it. Okay, and we move it forward 26 period. In this case, 26 days in the future. So this is the average of these two, but moving on 26 days in the future, right? And Senko span B formula is the highest high plus the lowest low divided by 2, or in other words, the average of the highest high and lowest low for the past 52 periods. So remember, it's double the Kijun Sen. Kijun Sen is only a 26 periods, right? And Tenkan Sen is 9 periods, but the Senko span B is 52 periods, right? It's much more larger. So if you change it to weekly, okay, it will literally take the entire year of 52 weeks of data and get the average of the highest high and the lowest low. And this data will be shifted 26 periods in the future, something similar with the Senko span A. And from here we can see the strength of the future clouds. This is a future Kumo clouds, this is a current Kumo clouds. So the strength can be determined by how is the direction of the Senko span and Senko span B. In this case, it's a bullish. Okay, you can see the Senko span B is flat. Okay, Senko span A is pointing downwards. This indicates a weak bullish in the future. So we can already see it reflects in the market price that is already bearish. That means it's a weak bullish in the future. Okay, if both of them is pointing upwards, it might indicate a strong bullish, something like this. This pointing upwards and this pointing upwards. Okay, in the bullish Kumo clouds, it indicates a strong bullish here movement, a strong bullish over here. And what if both of them is pointing something like this is a weak and this is strong. Okay. The same thing goes to the bearish market. So for the bearish, if both of them is pointing downwards, in a bearish Kumo clouds indicates a strong bearish hitting the bulls. Right. This is similar with that. So that's how we determine the sentiment, the strength of the bullish or bearish by using the Kumo cloud. So with all of this, we can combine it into one huge trading platform, trading strategies. Okay. So to determine, in order to have determine a bullish market, we can start to see, make sure that the price is right above this Tenkan span and Kijun's Tenkan line and the Kijun line. Okay, and to make sure that this line is the red line is slightly higher or higher. Tenkan is higher than the Kijun. Okay, and we will also want to make sure that the Chikou span have an empty big space. Instead of touching the lines like this, if touching the lines, then you have to get away from the market. It indicates the consolidating in the future. I want to make sure that we have a strong bullish clouds, Kumo clouds, strong bullish Kumo clouds. Something like this should avoid the market. It's only showing the weak bullish clouds, right? The same goes to the bears. And again, let's come back to the topic about how far is far from here to here, right? There is a tools, the Western tools. You can use average true index, true range, but if we can make it 26 periods behind, so it's matched with our hidden sand, right? Right here, you can see this is actually calculate the average price movement, the pips movement, okay, for the past 26 periods. So in this case, we have a ATL of 79. 79 indicates that for the past 26 periods, okay, 2060s, the average pips movement of Euro USD instrument is 79 pips. Okay, so if the Tenkan Sen, okay, or the Kijun Sen have a gap in the not twice larger than 79, that would be considered as not far. So if it is larger, in this case the average true index at this time is only 76, okay, 76, and this is moving 451, is almost twice. So you can see this is already showing a weak momentum, so it's time to stop buying, stop bullish. You can see the price eventually pull back to the Kijun and Tenkan line. Okay. And one more additional indicator we could use also the RSI, relative strength index. Let's put a standard 14th, and RSI is one of the most my favorite tools in order to predict the market. This can predict either oversold or overbought. So for example, this here, the price is already oversold, it's crossing 75, it's crossing above 75.9, almost 76. You can see the price starting to drop from here's point. Price starting to drop because it's already overbought. Okay, you can see another example of overbought is this. Price inclined to both, price drop. Okay, 100 pips something. So for example, of the oversold, when price is oversold here, crossing below, to price starting to go up. So we can combine both the Ichimoku Kinko Hyo for using the technique of Tenkan span, Kijun span, combined with the ATR to check the gap, the Chikou span for the area, the Senko span B and Senko span A to form the Kumo class in the future, and we combine with the RSI. Yep. So that's it today. Hopefully these topics will at least bring some Japanese inside of you to trade in the market, and of course don't forget some Western indicators to hand trade. Right, and again, as a general procedure, this videos acts as an educational purpose only. Thank you.